GKFX Prime presents the Market Analysis Webinar.
Hello traders, welcome back. Another video, another weekly analysis here for you with some more trading opportunities. My name is Dima, and as ever, I'll be taking you through the opportunities that we've got for this week in the markets. Last week was NFP week. We've got the week behind us. So now let's see where the market is leading us to, where it wants to go, what it's indicating. We'll have a better direction this week. The week after NFP is always a bit more clear, that second week of the month. So hope you got something from last week and you made the most of those opportunities. Let's have a look at what we've got for this week. So I'm gonna start with a brief mention of the news, what we've got on the calendar. So I've made a little note here. On Monday, we've got the speech from the Central Bank of Japan. We've got a speech from the pound from the UK, and on Tuesday we've got some forecasts on euro. That would be a slightly lower significance. Got another speech that could affect the pound on Tuesday, and on Wednesday we've got big bits of news. We've got the rate announcement from New Zealand, so that will affect the New Zealand dollar, and a rate announcement from Canada, so that will affect any CAD pairs. Really something to watch out for here. Really major news to bear in mind, and that could affect some of the charts, some of the setups that we're looking at. So we're going to have to watch out for that. Let's have a look at what we've got for this week. Now I've picked out 7 different charts and I've got a few cross pairs here. Let's see what we can find. All right then. I'm going to start this week with the dollar CAD. Let's have a look on the weekly chart as ever. So I usually start with, we've got the dollar here showing some signs of weakness from last week, ending the week on Friday with a bit of bearishness. And now we could see that on dollar CAD, if you look at this move that started from the bottom here to the top, creating these highs, and let's measure that move. I can see that we've got a bit of rejection here on these wicks, just to point it out to you. Oops. And now we've got a rejection from this level right here, which is 1.308. Let's round it up. The next point where I would look for a bounce would be the 50 level and the 61.8, as I mentioned before. So I'm just going to draw out the 50 level here. Let's draw the 61.8 as well, and then I'll just delete the fib just for clarity, and I'll zoom in, and I can see that we had this rejection. So I'll be looking for the market to draw towards this level here, and then perhaps the next second target area will be this level here, 1.272. So now with that bias of this short, I'll go to the lower time frame, and I can see that we've had swings here. We've had a low here, and then a lower low, and then we had the highs here, and then a higher high here, and then we broke this structure lower. So now the next thing I would look for is again a continuation as I did before, and then a pullback, a better price. We could form an area of interest somewhere up here. That will be possible. And if the market pulls back, I'll be looking for a continuation to the downside to reach this 1.28 level, which would be the 50% retracement of this whole move up here. And you can see how quickly this move happened. This was one hell of a big move, over 500 pips. And now we've got this choppy range here, price action. So this could be a retracement on the bigger time frame. But at the moment, seeing as we are coming down, we're stuck in this range. So I'll be looking to reach the bottom of the range and the 50% level as a as a first target. So that's the high probability scenario for now that I'm seeing. And let's see how the price action unfolds. So the news, remember, we've got a bit of news, and let's see if the market begins its move and really starts to shift with the volatility that comes, the timing of the news. So bear that in mind. This is a CAD pair, so that CAD news could play into this setup. Let's see how it goes. Right. Next one here, I'm going to look at some minor pairs. Let's have a look here at New Zealand yen. So reason I've spotted New Zealand yen here, I'm going to look at the weekly once again, is we've had this move up here. We've had the retracement and we failed to breach this high. So this is now a sort of, if I draw this out, this kind of range that I'm looking at. And if I look at the lower time frame, let's look on the daily. I can see that on the daily, what's happened here is that after this move, this impulse move, we've made this retracement, we've made this lower low here, and we created another lower low compared to this low and the lower high on this smaller time frame. So I can see a bit of weakness here in the market, and I expect that weakness to continue, at least in the short term, before any continuation to the upside. And with that, if I again going to do the same thing, let's measure this move. And this latest move that we've seen, this obvious impulsive type move, we've had a 50 retracement, market bounced but did not breach this previous high, which means that there could be further weakness here. And where could we see the further weakness come to? Well, that 61.8 level that I keep looking at. I'll delete the fib, and now I can more clearly see. I can draw a line here. So you could draw a trend line if you wanted to. There's a bit of a level right here where we can see, if I draw it out, extend it to the left, there's a bit of a zone here. So I'll be looking for the market to come down into this 61.8 point before possibly continuing to the upside. So for me, the high probability here is a push to the downside, possible break of this structure low right here as a possibility, and then any sort of retracement we might see would be on a lower time frame, would be that continuation to the downside. And I do like these lows that have been created, and because of these lows, liquidity, we've got 1, 2, 3, 4 points of contact. So that would indicate that there's many stops here. The market has not breached, has not pushed higher. So that's a clue that there might be some liquidity, people's stops resting here. If you want, we can also draw this level right here. So likely the market, it's high probability, I would say, that the market will breach this level, will move through this level. Now, I don't know if it'll move right through it with the force momentum, may not get a chance to enter. Let's see how it pans out. But I would like break of structure, pullback, and then down to the 61 level, which would line up with the 82.2 figure. If you want to be safe, you may want to exit a little bit earlier. So that's the high probability setup on the New Zealand yen. Again, just remembering, we've got New Zealand rate statement, which will be very important. Usually these big statements are one of the major news, rates from the central bank. And what does happen before that volatility kicks in, as you can see here, we've got a consolidation in the market, and in this case here we have a bit of a, some people call it a wedge, where the market just kind of squeezes in, and there's a bit of a squeeze, and then the volatility starts to kick in. Yeah, that's what we're seeing here. So let's see how the news goes. If you want to be safe, you really better to wait for the news to pan out. And if the opportunity doesn't come right at the beginning of the week, and then once it pans out, we'll see how the market unfolds from there. Okay, now let's move on to Pound New Zealand. Don't think I covered Pound New Zealand for a few weeks. I think I did maybe about a month ago or so. It's been a little while. So I do remember what I was looking at, if you were with me here, this huge impulsive move down. There was this break of this structure right here. The market broke lower, so the bias is to the downside. And now I was looking for the market to reach this retracement, to be in this retracement, and we could see that we had many weeks of very choppy price action, wicks to the upside, wicks to the downside, and now we are in this sort of range, aren't we? It's very tricky to read. Now the clue for me here is the fact that we bounced off the 50 and the market hasn't continued from there. It sort of just had a reaction and then went back up again, back into the range, creating all of these sort of wicks here to the upside. And what that says to me is that there is a possibility, I would say a higher chance, that we have liquidity here and we have the market may want to reach higher still, retrace to the 61.8, which again I'll mark out, before actually making its long-term massive, well, very, very long-term continuation to the downside to take out this low. Now, let me delete this fib. With that in mind, and because we have this very big run down where the market just did not give any opportunities, it was all selling, there was no buying, very little, I would say. That means that we've got a bit of a gap in the price, and that means that the market is more likely to reach towards these areas. Now it has filled in some of this area right here, and because I haven't seen a very strong reaction, we haven't reached lows. If I just zoom in for a second, got this low right here that wasn't breached. Then we have this low, and now we have another low. So each time you can see the market didn't breach below this, it respected this, it left this intact, and now we have another possible low to reach higher. Now, with that probability in mind, with that outlook at the moment as it stands, we could be wrong, but let me delete these. Let's just see where we stand. So I'm looking at this as a possible latest low, and I'm also going to look at, you can see there's a bit of a, oops, let's delete that. It's a bit of a trend line going on here on the lower time frame with these weeks. And yeah, so what I'll be looking here, if we are reaching higher, I'll be looking at the market to break this high, and then that would also break the trend line. Then a possible pullback, and if I get that better price, I would like to see the market reach higher into the 61.8 level, which would coincide with the 1.98 price point. So that's what I see as a high probability scenario. Until this unfolds, I'll be waiting. I prefer to sit on my hands because the probabilities won't be in our favor here. So let's see how this one works out. Not my favorite setup, not my favorite sort of ideal trade. We have a lot of wicks here, as you can see, so we may get some resistance at this level, or we may break right through it. Let's see how it goes. Again, we may have a catalyst here. We've got both pound and New Zealand here. So seeing as we've got pound, where we've got pound news this week, and New Zealand, we've got New Zealand news this week, that would mean that you can expect this to be quite volatile, and there will be some choppiness. It may be a bit hard to read. We've already got choppiness. We've already got very unclear price action going on here. and it's not easiest to read. So this may be a tricky one. So watch out for that. That's the pound New Zealand. All right. Next, let's go to, let me go to gold. I think I looked at what was I looking at? Silver short last week, wasn't I? And we're looking at the short there. And again, gold and silver move in similar fashion. So we had this very big drop on gold as well last week. So this week I'm looking at gold because that looks like the higher probability setup to me. It seems like there's more weakness in gold than there is silver at the moment. So what am I seeing here? Well, got clear bearishness, 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 and very bearish week last week. So I'll be looking for that to continue. Now, possible continuation would be obviously this swing here as the next point, and then we've got this sort of level right here that the market has bounced off previously. You've got these swings here and the wicks. So I'll be looking at this level ultimately. Now, let's look at the daily. The daily, previous 2 days, Friday, Thursday last week, closed indecisive. So in order to get a sell scenario, what would be preferable would be to get a better price. And what does a better price look like? Well, if I take the extreme and the obvious swings, high to low, I'll be looking at a retracement and then a continuation from there to the downside. And the downside would be here, 1720, and then after that 1680 would be the next level. But definitely want to reach to the higher price and then a reaction of the retracement, and that will provide a higher probability opportunity. Now we may just collapse as well. Let's see. As always, I always put this little disclaimer and always give this scenario plan B and C, because we'll just have to wait to see how the market unfolds from there. And I think that's what happened last week as well. There wasn't an opportunity. Let me just see here. I think that's what happened last week. Yeah. So I was looking at this zone from silver, and again, the market didn't reach there. It just made a more shallow retracement, and it dropped from there. So that's how it goes. Sometimes it just goes that way. Okay. So that's gold. Again, short bias, which also would coincide, I think, like I mentioned last week, there's correlation. We've got strength in the dollar long term. So long term, there'll be weakness in gold and silver because it's priced in dollars. Okay, next, let's go to the next one. Let's look at oil. Now, oil, this was one I looked at last week, and this was the beginning of last week. And I was saying if we get a break of this point right here and a retracement, then I'd look for that. That didn't happen. What I got was actually plan B, a possible secondary scenario, which was a break of this level and this level, and we had the market move right through it. It dropped very, very heavily. And that would indicate that not only is the setup invalid, but that there is a sell bias. Now the bias has changed into a possible short. So now with that, now that I've got that to bear in mind, then I'll be looking for a sell setup. So weekly close bearish with this very large wick to the downside. So that indicates that do want to be a bit careful here, even though it did close weaker than previous weeks. This wick indicates that there may be a little bit of either choppiness or a rangy market, or even more movement to the upside in the coming week or few weeks. So we're going to have to be careful with oil here. Now let's see, if we are going to sell here, where are we going to sell from? We want to get a really good price, high probability scenario. So we want to see the deepest retracement possible. So if I draw a fib from the last obvious high to low, where we're at right now, you can see I haven't reached the 61.8 level. So when that happens, the 61.8 and above would be a nice expensive price to sell from. If I go back to the weekly, I'll be looking at the low of last week as a target to come down and continue and hit the low, and then we'll see from there. So until then, I'll look for price action, reversal within this area, and a nice expensive price. And for me, that will be the high probability. Now that we have broken through multiple lows, I mean, we've broken several lows here. We've got one low broken, second one, and then this one here, and almost broke this one. So 1, 2, 3, 4 lows broken. That is weakness, much higher probability of weakness. But we did have this retracement towards the end of the week, and we closed indecisive, if you bear in mind the whole of last week's candle. Let's see what happens. This may not be an easy setup. It may not work out as smoothly as before, because we are, well, first of all, because of that wick, and that shows that there is a bit of buying, there is a bit of pressure to the upside. And also, as well as that clue, we've also got July and the month of July and later August. So that's a kind of the summer period where generally things get quieter and the market doesn't make such big moves. That's oil, right? Let's move on to now, let me go to, we've got S&P. Let's go to an index, S&P. Okay. Let's have a look at review what we looked at last week. So here's what I was seeing last week. I marked this zone out, and we did have the market reacting off this zone, pierced through it, and then made its next move up. And I was looking at this zone to short from. We didn't reach that. The market just made its gradual move higher and higher and higher, creating these higher highs, higher lows, and indeed it did move up higher. So it looks like it is reaching towards this retracement zone, this 61.8, you can see 78. Above that, I'll delete the fib just for clarity. Let me go to the weekly, and on the weekly we did close bullish. So we had these wicks, the week before that, a little bit of a easy to mistake those two. So the week before that, we did have a wick to the downside, and last week as well. So we're looking at some bullish movement here before the actual drop, or the possible drop on this retracement level, which is the one I've drawn out using the fibs. So let's see if this move up continues, and any possible reversal, any price action, any patterns here where the market makes a nice big bearish candle to the downside after stalling and reversing here. So it could be something like this as a possibility. Obviously I have no idea how it's going to happen, but let's see if there is some kind of pattern, if there is anything, and a possible drop to the downside. And again, yeah, we want to see big bearish candles like this. That would indicate the continuation to the downside from up here. If not, we may also see the market break this level right here, this high, and then that means we may go up to the next zone, which is up here at the 4,300 and above. So let's see for that. At the moment, we're going to have to be patient, wait for the market to do its thing, and then perhaps reach up here, and then we'll see what happens from there. Again, what you could do is, if you want to be really patient and really turn the probabilities in your favor, then another option. If you miss the move, or if you're just not sure, or if you just want to give it a bit more time, we'll see how it plays out. There could be the move to the downside, and after the move to the downside, another possibility is a pullback and trade the pullback and then a continuation down. And then you might have, you know, more like levels to play with and see what happens. You know, now I'm just speculating here. This is nothing to do with the market. I'm just saying that by history and patterns, it tends to repeat. So let's see how it works out. You never know. Just giving you some options and some possibilities of how the market tends to play out. At the moment, this zone, this level, if I draw it out here, this is probably a little bit more accurate. We've got these points of interest right here where the market has been moving around. If I draw it out in time, then I'm going to look for something of interest within this zone. Okay, so that's the S&P index. And lastly, as always, the last one I'm going to go with is Bitcoin here. Okay. Right, looking at last week, beginning of last week, we were talking about this point right here. And if the market does breach that, then we'll be looking for a buy opportunity. And it did do that. And towards the end of last week, it made a little retracement, didn't come back right down here, but it did make a small retracement at the end of the week. So with that, now that we've broken highs, we've got, if I look here, we've got higher highs here, broken this high. We've got a market just pushed right up, broke right through this zone, broke this high, broke this high, broke this high, and broke this high. So we've got multiple highs. If you were drawing a trend line, if you're a fan of trend lines, we broke multiple highs and now we've got push higher. So looking on the higher time frame, if I go to the weekly, we've got a possible push into this zone as a retracement. Now, overall, we are bearish because, as you can see, the market is extremely bearish, but we could be in a retracement phase. So this is the case where, because we've broken multiple highs here, multiple structures, we could be in that retracement phase. So there could be a possible buy setup until we reach this zone right here, and then possibly this zone here, which is a bit higher up and a deeper retracement. But this will be the safe point. Now, I'm going to stick to the same bias as I had last week of this zone. Let me now mark it a bit more clearly so that you can see where we're at. So you can see here we've got these wicks, and then on the other side, in the bottom. So here's the top side, we've got on the bottom side, bottom side, bottom side. And again, we may come down, and let's see if that does indeed happen. Just delete this. Oops. So if we come down once again, come down into this zone, I'll be interested there, and for me that will be a higher probability scenario. A nice, better, cheap price now that I've got this bias to the upside, and then looking to go into this 25,000 and possibly beyond into 27, 28,000 up here where we've got this gap and the price just dropped from there. Now, obviously, plan B would be if price breaks below this low, then this whole buy scenario is invalidated and we're likely to drop down further beyond this low right here on a higher time frame, and then down much further to a point that we marked out previously, which is about the 13,500 level. So yeah, a break below this structure here would invalidate the whole idea that we've got here on the buy side, because then the market obviously does not want to keep these lows intact, doesn't want to push higher. If you look on the daily, the previous 2 days candles closed bullish. Here was bearish, was a inside day. So we do seem to be having a bit of bullishness for now. And we've got another major high right here. So I would expect the market to at least reach for that. But we'll see how that goes. Obviously, right now would not be the best price because we are nowhere. We want to see a much nicer price, which would be down here. That's the high probability in terms of the buy. And obviously, like I said, if we get breach of lows, then that would invalidate and trade the idea, and it would not be high probability, and it will not be the setup anymore. Now, obviously, we could also have, once again, the market do something completely different where it could just blast right through, start the week, and then we would just have missed that trade, missed that setup. If that happens, then so be it. Sometimes the market does that. So that's Bitcoin for you, and those are the 7 charts for the week. Once again, remember the news. Let me just remind you. Here's the major news for the week. Oops, just bring that up. So we have got pound news to be aware of. We've got the pound New Zealand we're trading. We've obviously got New Zealand, the rate to be aware of on Wednesday. We've got 2 charts, New Zealand yen and pound New Zealand. CAD for sure, and dollar, we've got CPI as well, but the focus is on CAD here. We've got the dollar CAD set up. That could also affect oil, and oil generally tends to move, give us some volatility midweek, especially Wednesday, Thursday. That's a tendency for oil. Yeah, and S&P could coincide with the CPI USD news, and also USD news could coincide with the gold setup we're looking for. All right, so that's the outlook for this week. As ever, this is not a forecast. This is just an analysis with a few high probability scenarios. Trade with care, manage your risk, and remember, take the good setups, choose the ones that look better to you. And obviously you have your own outlook and strategy, but most of all, risk management is #1 priority. So hope that helps you with the opportunities for this week, and best of luck in your trading week. And I will see you as ever next week for some more trade setups and opportunities. All right, take care, have a good week, stay well, and catch up with you next week as ever. Thank you.